Hey there, Greg Drozell. Welcome to my channel where we provide the knowledge, tools, and strategies you need to help you build, protect, and define your own true wealth to live an empowered life and become more financially free. In this video, we're going to talk about how building a strong financial foundation and how the art of successful financial planning can help positively transform your life for the better. We'll cover key financial strategies to help you take control of your finances and build wealth successfully for the long term. So let's dive in. The first step to building a strong financial foundation is setting goals and understanding your current financial position. It's important to understand where you're at right now in terms of your finances, whether that be your income, your assets, your liabilities, and your expenses, and understanding and setting clear goals around what you're looking to achieve in X amount of time to get to that desired future state. Some common goals that you might have could be something like buying a house. It could be investing for your children's college education. It could be saving up to move to a new place or take a vacation, or it could be investing into a new business or creating a new income stream. Whatever it is, it's extremely important to set clear goals on what you want to achieve and what you desire in a certain amount of time so you can build a roadmap and a financial plan around them. In addition, a lot of times when we set goals, they're focused mostly on the financial aspect. However, a lot of these goals could be focused on other areas of your life. For example, around your core values like your family, your health, or your faith, or even your experiences like your travel goals or some type of exploration or education and wisdom, or for example, your contributions back to society. Could be how you spend your time, your energy, and your resources. And setting clear goals around all of these areas, not just the financial goals, will actually help you understand what you want to use your money for and what its desired purpose is to do in order to accomplish the most important things in your life. So step one is just setting clear goals, getting financially organized with your current situation and knowing where you're at so you can create a roadmap to where you want to go and successfully achieve your goals in the time that you desire. The second step to building a strong financial foundation is creating a budget. A budget is a plan that helps you outline your income and your expenses and your cash flow moving forward so you can know and understand where your money is going each month so you can then accomplish your goals. The first step is really tracking them. So you want to track your expenses, see where you can cut back. Now, your expenses will fall into two main categories: your fixed expenses and then your variable expenses. Your fixed expenses are going to be things that are the same pretty much every month that you're paying for. That'll be like your rent or your mortgage payment. Variable expenses will be things that you like to do maybe each month that aren't always the same. Perhaps things you like to indulge in, like going out to dinner or taking a vacation. So you'll want to see where you can cut back and then use your disposable income to effectively create a budget and save towards your most important financial goals. When you create a budget, you will have clarity, you'll have confidence, and you'll feel financially organized, where you'll know exactly where every dollar is going each and every month so you can successfully start saving and investing for the long term. Number three, once you have a budget in place, you'll want to set up an emergency fund. So now that you'll be able to save, the first place you want to actually start saving is going to be an emergency fund, where in case something happens to you, for example, you have a loss of your job or a loss of income of some sort, or you have death or disability in your family and you have higher expenses during that time, you'll want to make sure that you have money stashed away to take care of yourself in time of need. I would generally suggest a common number would be somewhere between 3 to 6 months of after-tax expenses. If you're a business owner, you might prefer to have 6 to 12 months of after-tax expenses. It's really up to you, but typically you just want to make sure that you have enough money to cover at least 3 to 6 months of after-tax expenses in case of emergency so you can land back on your feet when something happens. The fourth step to building a strong financial foundation is paying off debt. So once you have an emergency fund of cash saved up, you'll want to start paying off bad debt. Bad debt would include like your credit cards, anything with very high interest payments, where if you pay them off, you'll probably be saving yourself close to 20 to 25% of return or fees every single year. So you'll want to start paying off your bad debt. And then once you take care of credit cards and things that have very high interest, your highest interest payments first, you'll then want to start paying down things like your mortgage or your school loan debts, debt that have maybe less interest and also or could serve as an asset for you long term. So again, number 4 is making sure you pay down debt. The fifth step in building a strong financial foundation is understanding risk and your need for insurance. Life can throw many different curveballs at us. And when a natural disaster or when something bad happens in your life, you're gonna want to be financially prepared to support yourself or your family to get through that trying time. Insurance typically provides a safety net in the forms of financial compensation to make sure that you can survive and take care of yourself when something drastic happens. This could be like a death in your family to make sure your loved ones are taken care of. That would be in the form of life insurance. This could be if you lost a limb or if you couldn't work in your trade or you were hurt or disabled, that would be disability insurance. And it could even be health insurance if something, God forbid, happened to your health and you'd have to either go to the hospital or get a surgery, right? You wanna make sure that you can be financially taken care of without it depleting your savings. Some of the most common forms of insurance to take a look at are going to be your home, your property, and your auto insurance, as well as your life, disability, and health insurance coverage. And you'll wanna understand your need for managing and having to control this type of risk depending on what stage you're at in your life. So it's important to understand your risk tolerance and your need and ability to manage risk and what that looks like specifically for you. The sixth area in building a strong financial plan or financial foundation and building long-term wealth is going to be saving for retirement. Now, if you're a W-2 salaried earner or worker, the easiest place to start is to start investing into a retirement plan that's offered by your employer. This could be like a 401k or a 403b plan if you're in the healthcare system, or if you're in government, it could be like a 457 or TSP plan. The most common plans that people know of are typically the 401k plan. And inside of that 401k plan, you can contribute each paycheck into this plan and select investments to help you build long-term wealth over time. Now, in addition, your company may even provide you a match. So for example, if you contribute X, they may match up to a certain amount or 100% of that X contribution. So let's say you contribute 4% per pay period. Well, they may match that 4% for a total of 8% going into that plan. Now, if you're not part of the W-2 world or you're not a salaried earner, in other words, you're a business owner, you'll want to consider opening up individual retirement accounts that would be outside of your company plan. This could be like a traditional IRA, individual retirement account, or a Roth IRA, an after-tax individual retirement account. Or if you're a business owner, this could be a SEP IRA or a simple IRA. So there are different types of IRAs depending on your status or depending on your goals, whether you're a business owner or if you're just an individual looking to open up another retirement account outside of your employer. Anybody can do this, and you'll want to understand the pros and cons of what that entails and what that looks like for you. The key thing is to just focus on opening up and saving into retirement accounts to help you build long-term wealth over time. The area number 7 to building wealth and having a strong financial plan and foundation is investing wisely for the future. Life becomes more expensive over time, and cost of living continues to keep going up, which is inflation, where the value of the dollar becomes worth less over time. So it's important to start investing so you can earn more than what the cost of living is increasing at, and you can start saving for the long term, investing and having enough capital eventually to build yourself a bucket where you can use those assets as you see fit for complete financial freedom. Now, there's different types of investments that are out there. For example, investing in the stock market or investing in real estate or investing in private businesses. Within the stock market, for example, you can buy stocks or bonds, or you can even use investment vehicles like ETFs or mutual funds, or even real estate investment trusts. There's different types of investments and they all have different risks associated with it. So you want to understand your risk tolerance for the desired return that you're looking to achieve to help you achieve your investing goals. The key thing is to work with a professional, work with a financial advisor to understand your risk, to understand the reward you're looking to seek, and how much money you really need to accomplish your goals specifically. In conclusion, building a strong financial foundation and achieving long-term financial success requires patience, discipline, and hard work. Through setting goals, creating a budget, creating an emergency fund, paying off debt, preparing and understanding the needs for insurance and risk management, preparing for retirement and starting to save and invest, you can set yourself up for long-term financial success and ultimate financial freedom. If you're looking for help or guidance in any of these areas to get organized and understand where you are today and where you need to go to accomplish your financial goals and in what order you need to do them in, feel free to schedule a time using the link below in the comments. Our team would be happy to speak with you and help you plan successfully for your financial future as you continue on your journey to defining your own true wealth. I hope you got some value out of this video. Hit the like and subscribe button if you did, and we look forward to seeing you in the next video to your financial success.